Hey, it's Mark Ferguson with Invest for More, and I am in my office garage, and I have a lot of exciting things to talk about in this video. I've got a really cool program, new idea I'm doing to track some economic data. I'll be talking about that here later in this video, what I see, what the graphs are saying, what the data is saying. And I have another really cool purchase coming up that has to do with this garage. And we're making some big changes here at my house to make that purchase work. And so you might think, well, what does that have to do with economic data and the housing market and housing crash and all that? Well, this is a pretty big deal for me, and I would not be doing this if I didn't have some confidence that everything's going to be okay and the world's not going to explode. I could be wrong, but my hunch tells me things are going to be just fine, and we'll talk about that later. But first, what is going on here? All right, so this is the 94 Supra twin turbo. We got that a couple years ago. We have the 91 Supra turbo out there that I got just a month or so ago. And then we have the 928 over there. And I have a lot of cars and a lot of things going on. And not only that, but I decided to add to all of that, I know I need to clean that car, I'm sorry. I had my golf simulator in here. So I'd have my golf simulator in here, and when it's cold and snowy, we could come in here and play with my friends. But then I have to move my cars out into the cold and snow, which kind of defeated the purpose. And then I never really used the golf simulator that much because my cars were always in here, and kind of a waste. And we used to have it in a different room over by where the dance studio was. And then this used to be an office for a different company. We converted this to a garage and then gave part of it to the dance studio. The dance studio took my other golf simulator space. So it's a really cool, nice space, especially now that I've taken the simulator out. And you can still see we have some remnants up there. And yes, I even did some of the work. I was up on that ladder, cutting down some of the wire and stuff. And hopefully Jared, who helped install that, won't get mad at me when he has to install it again and I cut all the wires wrong. But we'll see how that goes. I have another car coming that I've wanted for a very, 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 very long time. And it's actually, I think, being picked up today, so it should be here next week. So I had to get something ready because I have the Diablo, the Aston Martin, the Lotus Esprit, the Mustang, all in my garage at home. I have 3 lifts there, but still not enough space. My Velociraptor and Audi S4 still hang out outside. But if I take 2 of those lifts, bring them here, I should be able to fit all my cars inside that need to be inside. And I might even have room for another one right here because this is a big space here. And right now I can't use the lift above my Diablo because it's too wide, it won't go on top. And the doors open up, so I can't have the lift anywhere else but at the very top rung, and there's not room in my garage to have a car above it. So I'll be able to use one more lift, have more space by doing that. So hopefully the economic data all stays together and the world doesn't implode because I'm buying something very, very cool and very interesting, and there'll be more on that soon. I don't think I'm gonna give away yet, but it'll be here probably next week, and we'll do a video then. Maybe we'll do some more videos on these cars as well. But until then, let's take a look at that economic data and see how it looks and some of the really cool new features we've been adding to one of my products. Okay, so I'm on my Insiders program right now, and I do have quite a few programs. I've got a complete blueprint program where we do coaching calls every month. This Insider Club where I do podcasts and write newsletters and have all kinds of other cool stuff. I've got some other programs and coaching programs too on investformore.com, and I have tons of free stuff on there, free articles, also all the free videos on YouTube. Also, you know that. So I'm not the best at marketing myself and selling stuff. I'm better at creating content and doing that side of it. But I do this stuff to try and help people. So I want to do something kind of cool in the Insider Club. And right now, we have a Facebook group, a private Facebook group you can always ask me questions on. We've got newsletters, like I said, podcasts on here. You can always go back to calculators, and even some training for like quick start real estate agent and investor training that has modules, some videos and stuff on it here. And this is not an expensive monthly fee at all. We'll talk about that, but it's really, really cheap right now because it's on sale because we're doing this new cool thing. And this new cool thing we're doing is the dashboard. And so just go right here. And I had a lot of stats in my newsletters before where I'd talk about interest rates and different prices for different things, and we'd always list those in the bottom. But now we took it a step further where we have interactive graphs, and you can get to these anytime you want on the Insider Club. And we're going to add more of them. We just started. We're going to definitely add more. it tells you all kinds of cool information. And I like this because I can kind of look at things and analyze the market myself. And I don't know if I'll do a YouTube video every month analyzing these, but definitely do something every month analyzing these for the Insiders Club, talking about what I see, what's changing, what could be happening in the future. So the first thing is obviously housing prices. And a lot of this data is from Fred, really good source for different data. But the cool thing about this, and actually I'm going to refresh this, if your graphs ever get messed up, just refresh it and they'll go back to where they should be. Because like I said, they're very interactive. There we go. And we pull the data as far back as we can. A lot of this data has different data, years they go by and different things, so it can be tricky. But we try to do the best we can. And you can see here kind of the market. There's the housing crash right there of 2008. Prices have gone up, steadied out for a little bit, then shot up here after COVID, which has been crazy. And people say, this is unsustainable. We can never have this kind of growth. It has to crash. But like I said, we can zoom in here, which is really cool, and then go backwards, which is really cool. And if you go back to the 70s, an interesting thing happened. Like the exact same trajectory of prices. It was absolutely crazy. They had 2 recessions, 2 oil crises, incredible inflation, higher than we have now. And you can see the market. And they're like, well, it had to crash at the end, right? Well, no, it didn't. It leveled out for like a year and then just kept going up. And you can see what the market does over time. There's the crash. And honestly, looking at it this way, we had a 20% drop or so in prices. It wasn't that horrible. Some areas had it worse than others, but overall, like that dip compared to what we've had, over time is very minor. And what we're having now is very, steep for sure. But we've had steep curves before, increases before, and not always had a crash afterwards. That's not always what happens. So just because price is up doesn't mean they come down. There's so many different other things that go into it. So prices in themselves don't really tell us much. You've got to look at the other data. And this is another cool one we have is mortgage rates, right? Or interest rates for a mortgage. You got the Fed rate, which we do have too, but we can see what rates were over 18% in the early 80s. Just insane. And we talked about how prices went up in the 70s. And here's what mortgage rates did. Went from 7 to 11-ish, 12, right in that range, depending on where you stop and go. Shot up. But we never saw a crash. Actually, prices shot up as well. And then you can see rates slowly came down over time. And here's where we are right now, 5.1. So everybody's freaking out about interest rates being high. Look at this compared to historic rates. Yeah, we had incredibly low, record low rates here the last few years. We were spoiled. There's no other way to put it. We were spoiled, and now we're back to normal. But 5% is not a crazy high rate. 18% is a crazy high rate. And you can see the real estate market during that whole time. We can kind of zoom out a little bit here, or zoom in. Went up. There's no crash, even with all this stuff. So it's kind of interesting just to see how all that works. So, like I said, if you start doing too much of this and going crazy and making it look all weird, just refresh your page, and then boom, it's back to normal. And this data automatically pulls from the sources. So as soon as the sources update, it will update on our page. So we've got some other cool stuff here. I want to add more of these for sure. Single family permits. So these are new construction permits. And you can see, we can go back. How far can we go back? Pretty far, to 61, and see the permits and how many were pulled, what happened before the crash, right? That was so much building. It was crazy. Massive drop. The complete opposite happens. Almost no building for years. That's why we have a shortage now, which some people argue as well, but there's definitely a housing shortage. And now we're back to above normal probably. If you had that would be cool to add. I wonder if I can get Justin, I don't know, to add like an average line here. That would be really cool. I'll talk to him if I remember. Okay, so, but these are just permits. These aren't finished houses. These aren't completed houses. I want to show completed houses on here too. We'll add that one because that's way, way lower. It's actually higher in proportion here and lower here because permits is not a finished house. It's just the start of a house. And it takes so long to build right now that it's just, there aren't that many houses being built. So that's a cool one to see, but I want to add more. And then this is vacant houses. So you always hear, oh, the US has millions and millions of vacant houses. There's plenty of houses for everyone. And you can kind of see, they didn't track data for too long, but there were 19 million vacant houses in 2010. And that has decreased to the COVID curve. I call this the COVID curve because all this data gets real wonky right when COVID hit. There's a lot of weird stuff that happened, so I ignore these crazy swings and kind of look at the trend. But you can see we have 15 million vacant homes right now, which is the lowest it's been since 2003. Almost 20 years, the lowest amount of vacant homes we've had. There's always going to be vacant homes. People working on them, people selling them, vacation homes, abandoned homes. There's going to be vacant homes, but there are not tons and tons of vacant homes, especially when you look historically. We have 4 million less vacant homes than we had in 2010. All right, and we can keep going down here and see some other cool stuff. Inflation, right? That's not been in the news at all lately, but you can see, oh, look at that, negative inflation. That's pretty crazy. But you can see where inflation is pretty steady. It has some ups and downs, obviously. And then, boom, we had this crazy one here. And how far back? Oh, look at that. It doesn't look so crazy anymore, does it? It's still crazy. But look at that in the 70s and 80s, that inflation. How far do we go? We can go to the 40s. This is amazing. I didn't know we could go back this far. It does go back to World War I. Okay. I'm really excited right now. Look at, this is 1918, or 20, sorry. After World War I, when everybody printed money. Because you had to print money to pay for soldiers and food and supplies and everything. And inflation went absolutely bonkers. And then you had the Great Depression, which, well, no, that's not the Great Depression. That is 21. So there's just deflation after that. Craziness going on. Here's the Great Depression right here. It's funny because all of this happened pretty much under the gold standard. And people are always talking about how stable gold makes money. I don't know if I would agree with that based on these charts right here. Then we came along to the 40s. In the 40s, that's World War II. Again, had to print money for the war. And then after the war, we had huge, massive inflation as well, up to 20%. Interesting enough, the second highest appreciating market in the last 100 years was during the 1940s, when again, inflation was crazy. And you can see how much, right? The dollar was not stable with no inflation back in the past. It was crazy differences. And then after kind of the 80s, you see things really start to stable out. We had that drop there. Now we have a big bump here. But historically, right, we have high inflation, but it's not crazy. It's not insane. And it's starting to level off already. If we scroll in here, we can see it's dropped. And I saw some article today that said another key indicator had dropped down to 6. I don't know exactly what it was, but my estimate is inflation is definitely going to level out and not go crazy like it did those years. But it's just cool to see historically and put things, in perspective of what happened before. And then the consumer price index is, how much stuff costs us. That's obviously increasing over time. It pretty much is always going to go up until you have like some recessions. And then you'll have some dips here and there. So, but that's how our economy works. Prices get higher. So when people complain about prices getting higher, don't think that's ever going to change. That's just how it's going to be pretty much forever. Recession probability, and to be totally honest, Justin put this on here, and I don't know what this means. So I'll have to look into that more. You can see it said there's a 100% probability during COVID. That's the housing crash. There's a little one there. That was the .com crash. How far back does it? Ooh, look, this goes back far too. So, interesting, but I don't know what that means, so I won't talk about it too much. And then here's the federal funds rate. So we can come and see that the Fed has raised rates, right? That's what everybody's freaking out about. Well, what that looks like in the big picture. Pretty crazy how high rates got back then in the 80s. And they were even pretty high for a while. And then after the crash, they dropped them to basically zero for a long time to bring the economy back. The economy got better. We started bringing them back up. COVID hits. Boom, let's drop everything back down again. Now they're starting to go up again. It's not the end of the world, people. This is, in the grand scheme of things, right? Our economy has done fine. The housing market has done fine with rates much higher for decades and decades. So now, especially if you kind of scroll in here to the 90s and 2000s and Yep, it's not the end of the world. All right. Then we have some basic ones. The S&P 500, which basically measures the stock market. You can see it's dropped. Everybody's, freaking out about the stock market. I am not a stock person. I have zero money invested in stocks. But look at this run up we had here. And we had that little drop. That's going to happen. You're going to have ups and downs in the stock market. Now, some people do say the stock market always goes up no matter what. I would always point out to the kind of 1999, 2000 range, all the way to, 2012. It basically stayed the same for 15 years, sorry. And then we've had this big run up here. But stocks don't always go up. You have times where they're level or they go down, they go back up. Over time, yes, they typically go up. But there can be some long stretches where they don't just go up. Now, compare this to real estate, and I'll try not to get into that too much. Yes, we even have Bitcoin on here. So Justin really likes cryptocurrencies. Yes, I even have some cryptocurrencies too. But you can see what Bitcoin has done. It's crazy meteoric rise, big crash, big rise, big crash, rise, crash. That's just how crypto kind of works right now. So again, people are freaking out about crypto dropping, but yeah, I'd be freaking out if I bought up here. But that's something to be expected when you're buying into something that's new and different and has lots of volatility. It can go up real fast. It can also go down real fast, but that's kind of cool to see. And this is one I really, really like too. Lumber. So this is near and dear to my heart because lumber kind of gives us a gauge on all materials a little bit on what prices are doing. How far back can we go on this one? Look at this. This is so fun. Back to 99, you can see how stable everything was. Even through the crash, it kind of dropped a little bit. Super stable. And then we had the supply chain issues, and nobody could work, and prices went crazy. And then they dropped, and we thought everything was okay, and then they jumped up again. And then now they're starting to drop again. So that's good news. Now, some people think this will automatically make houses cheaper to build. But when this happened, it wasn't like builders were out there paying these kind of prices for lumber packages. Even right here, they kind of just stopped buying lumber packages, or they already had their prices locked in for the houses they were building. Because if they were paying these kind of costs, they would have had to raise prices way, 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 way higher. And some prices did go up, but all the other costs are going up too. Appliances, windows, utilities, land, permits, everything's going up. So just because these go down doesn't necessarily mean it's way, way cheaper to build a house. It just means now maybe they might build some more houses if these go down, except the interest rates went up to kind of counteract that. But just because this peaked and dropped doesn't mean houses will get cheaper. It just means maybe they'll build more of them because they really kind of just stopped building when lumber prices went so high. All right, then we have oil, which I always think is interesting. Some people may not know this, but northern Colorado is a big oil production area. We have tons of oil wells around here, tons of oil companies. And fracking is very big here, so if you don't like fracking, you probably won't like our area much. But you can see the oil prices, huge jumps there, crashes, jumps. Oil can be a lot like crypto, and it's pretty volatile in all of its prices. For a while there, remember, oil was like negative in some futures or whatever it was. That was pretty crazy, and now it's climbed back up here again. Now, the correlation between oil and gas prices, obviously there is some, but there's obviously way more other factors than just oil prices because gas is very high now. And oil still isn't like in record numbers by any means. So there's other issues there too. And then finally we have gold. And I don't invest in gold. Let's see how far back we can go here. Oh, that's when gold was set by the government for a set price. And then they let it do its own thing. And you can see over time it's had its ups and downs too. Gold is by no means a super steady, always increasing asset either. You can see it's had some peaks, some drops, gone up again here some, but really, nothing crazy here based on what I'm seeing. A lot of people are saying, oh, the dollar's going to crash, all currency is going to crash. If that was true, you would think all your money would be moving into gold and gold would be going crazy. And it's, increased here, but definitely not gone crazy or continued to go crazy. So we'll see what happens. Okay, so those are the cool interactive charts we have going now. Like I said, we're going to add more of these. And if people want to see more of them and you're in the Insider Club, please let me know and give suggestions because lots of different stuff we can pull in. And one I want to pull right now is housing inventory, which we have on the list to bring too, because people are talking about, oh, everyone's listing their houses. Houses inventory is going crazy. There's more houses being listed than last year. Is that really true? Well, what people are doing is they're saying the week over week increase in house listings is more than last year. So if they listed 100 houses last week, this time last year, and they listed 110 houses this week, this time this year, there was a 10% increase over last year. But that doesn't mean total inventory is more. As you can see, we can go to April 2021, 1,150,000 houses listed. April 2022, 1,030,000 houses listed. Inventory is still lower than last year. Last year was record low inventory since it's been tracked. This was record low inventory since it's been tracked. So, have there been more listings? Yes. There's almost always more listings this time of year. Is there a slightly higher increase in listings this year than last year? Week over week, maybe, but not total. We still aren't to the total we had last year, and last year was crazy low. So for us to really get back to normal, we kind of have to be like up here somewhere in the 2 million listing range to be normal. And I wish Fred went farther back with this, but they don't. That's all the farther back we can go on that data, but we will pull that in. Okay, that is all I've got for this video. Like I said, we have the Insider Club where you can see all these charts and do all this cool stuff. And if you mess yourself up too bad, just click refresh and it removes all the mistakes you made and you can start over again. Really fun. We've got cool calculators on here, all the newsletters I've written. I write those newsletters. I do the podcast we've had for a long time. And right now, yes, I know it's crazy. It's on sale for $9 a month. I know it's really expensive. And you can cancel anytime. You don't have to join for 6 months. You don't have to pay anything up front besides that $9. The only risk is if, once it's not on sale, if you quit, you have to come back at the higher price, whatever we have it as. And but for right now, you can do it for $9 a month. And all you have to do is just go to investformore.com/insider. I don't know if my face is blocking this or not, but if it is, investformore.com/insider or just search investformore.com and insider. It'll probably take you there too. And yes, this is a real countdown number. This isn't one we have open all the time. Like some people, the sale really does end. And like I said, it's $9 right now. All you have to do is click on here. There's no coupon needed. Anybody can join. And yes, if you are already an insider and you're paying more than this, you can cancel and join at the lower number. Oh, why did the coupon code disappear? Well, that's weird. Hold on a second. Let me try my fancy refresh. There we go. I must have accidentally clicked remove, but there you go. See, don't have to do anything special at all, and you can sign up and enjoy all the cool stuff we have to offer. All right, that's all I've got for this video. I can hear John, who works for me, moving stuff upstairs and dropping it on the ceiling above me. So more of the golf simulator things are being moved up there, so that's cool. I did do some work myself, so I'm not just making everybody else do my work. I did some of it. And we'll have some different cars up in here. Of course, I'll have a video on the new car when it comes. I may do some more videos on the Supras and different stuff here too soon coming up. So nice. It's not crazy windy and the weather's getting nicer, so I can actually enjoy them. So that's been cool. Really cool excited about the dashboard and different stuff we have for the Insider. So hopefully you guys want to check that out too. Love the comments, love the shares, love the likes. Keep those coming. Love seeing new subscribers. We'll be back soon.